You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskens, your host. As always, we have Brendon Ptolomey back in the studio for his quarterly regional property market update. Brendo, we rarely do this, but why don't we just start in Karratha?
K-Town, bring it on down.
What is happening in K-Town, mate?
So, for those that didn't see the massive news, K-Town is getting a Bunnings.
The prices can't be down, though, in K-Town, surely.
Yeah.
Surely you're not getting gloves for $1 each.
No, I'm going to make a trip to Karratha just to go to the Bunnings once it's done. Number one, I want a sausage sizzle from K-Town, Bunnings. But number two, price...
That won't be $3 each.
I don't think they'll be a charity either. They'll be out the front trying to make money out of that because they'll need a return on their investment.
Is that going into Tambray? Because there's land there. Where else would it go?
Yeah, I think it is. I actually haven't double-checked. I've just seen the headline and then talked to our valuer up there, Mel, who tells me that the whole town is abuzz with the concept that Bunnings is coming. So, interestingly, they haven't gone to Karratha in the past because of freight logistics. As we all know, there's a half-decent port down the road in Dampier. It's pretty full. It's full of salt and it's full of iron ore. And my understanding is that there is no way for Bunnings by sea to get their product into town, which is obviously a cheap way to move freight. And so clearly it's a land transport, which is how lots of food and that kind of stuff and products would get to Karratha anyway. But essentially, Bunnings resisted being in town in the past, basically because of the logistics and freight of being there, but also obviously construction cost and finding a site and that kind of stuff.
So what's changed?
I think it's just availability of site and someone willing to take the risk in terms of a return on investment from a property point of view, as well as the demand factor. Clearly, they've understood that the town's now big enough and warrants the concept that they can sell enough product into the local town. Yeah,
even with the increased cost of freight.
Yes.
Wages.
Looking forward to that road trip. It's a long way to drive to get a sausage sizzle, but we'll be there.
You'll be flying, Brendon.
I don't know about that, mate. I don't mind a drive up the coast. We can drop into Exmouth on the way.
What a surprise.
So marketing Karratha is maybe we should get to the property prices. Look, it's still very strong in town. Again, we're probably a little bit surprised by that demand side of things. Supply is, again, a very big issue in terms of actual options to buy in. And then just an example of evidence where investors are really active. Mel reports that there was a house in town that had a 2-year lease on it. So essentially that lease is locked down and you know that income's coming in for the next couple of years. 7 offers on that one. So really active investors in the marketplace looking for product and obviously still believing that the outsized returns in terms of percentage return on investment or the yields that you get in that marketplace are still worth chasing.
What's the mix of investors to owner-occ going on? And people were still bobbing their head up asking me sometimes, should I invest in Karratha? And my response is always, not unless you have a massive risk profile or if you're a local.
The investors are still chasing those yields, and as you're alluding to, you just need to be across what you're doing there. What's the house that you're buying? How much maintenance does it need? Is it getting an outsized return that is worth taking that risk? What are you hedging it against? Go and take the risk, that's fine, but just make sure you're educated about that risk. And I wouldn't have thought that Karratha would be a first-time property investor type scenario.
Because it's been a last-time investor scenario for people in the past.
Yeah. And just as an aside, when the market crashed in Karratha in the past, it went down by 66%. And to give people an idea of how markets correct, essentially the values start going down, but there's no transactions, i.e. bargains don't suddenly pop up and the market drops 66% over the night. It takes 2 to 3 years to do that because the people that are holding, they don't want to realise their loss, so they don't sell until they get really desperate.
Even though the rug has been pulled from under them.
Yeah, and so they don't want to take the loss. They won't realise the loss. And essentially what we saw in terms of the work that we do for financial institutions is that unfortunately properties had to be sold off in that marketplace, as in mortgagee in possession. But not just that people actually lost other properties around Australia because they'd hedged those to buy into the Karratha marketplace. So just be careful. Just make sure that you're educated in terms of going into that marketplace. Just remember that you will be competing with people that know what they're doing. There's investors that own multiple properties in those marketplaces, Port Hedland and Karratha, and there's locals that live there that essentially are very good at investing in property and getting a return.
Let's move to Port Hedland.
Yeah.
And South Hedland.
Yeah, so South Hedland's really busy at the moment, again suffering from a lack of supply. There's some value growth going on in there. Rental pressure is still quite strong. Again, locals competing with investors for product. Port Hedland's also very strong, lacking supply, and most people that listen to us will understand that the port buyback scheme is continuing to go ahead in Port Hedland.
How long does that go for? We've been speaking about that for 6 years now.
Yeah, so essentially it's a slow buyback where the port buys when the vendor is ready to sell. There's some scenarios that play out around that in a process and a system, but the person that sells, if they don't want to sell, they can stay there for a fairly long period of time. I'm not sure the end date off the top of my head, but essentially the port will just slowly acquire each of those individual dwellings, and then essentially my understanding is that they'll slowly demolish those houses and turn it into parkland into the future. Yeah.
But if there's only one buyer for all these properties, how are prices going up?
There's some scenarios around the way that the properties are valued, and so that a price is agreed between the port and the vendor. Yeah, so those values aren't going up as exponentially as a free market.
So it can't really be an investor opportunity, can it?
An investor wouldn't come and buy a property in Port Hedland in the dust impact zone anymore. That's just not a scenario that's enabled anymore. Yeah.
So really we're looking at South Hedland, and what we're talking to there is, for the first time again, growth scenario.
Yeah.
It's gone over the last 5 years through growth and then stagnation in growth, never really dropping.
Yeah.
But you're saying it's back and hot again.
Yeah. Value growth there. Just remember, in Port Hedland, outside of the dust impact zone, there's plenty of other property to buy, and there's a lot of pressure on those values because there's a finite supply.
Gotcha. Geraldton?
Yeah, Geraldton's really interesting. So the feedback from a valuer up there is essentially that it's still going very hard in terms of movement. Essentially, there's...
Is it white hot, Brendon?
It's pretty white hot. It's a little bit like Armidale 2 years ago scenario. We've got East Coast buyer agents in the marketplace. They're driven by capital values, so it's some of the lowest priced coastal real estate in Australia. Literally, you can buy things at $300,000 in there still. I'm not sure what that product is, but
that would have doubled in the last 4 years.
Yeah, spot on. Yeah, and then the rents have got a lot of pressure on them. So whether you go through from quality government style housing through to local investor product that's rented out, the pressure is on those rents. That's therefore driving yields and essentially returns going up. It also has a scenario where land is essentially going to continue to run out as it gets taken up. There's a fair bit of construction going on, but again, these are finite product and finite supply into the Geraldton marketplace, and pretty good demand, an economy that is pretty healthy at this point in time.
So you're saying it's a buy still?
Yeah, look, I think there's some scenarios that, again, educate yourself, but look, it's still a good price segment to go looking around in. I think there's probably some angles in terms of the types of product you buy, or maybe nailing down your type of tenant in there. There's some demand for government employee type housing through there that I think probably needs to be satisfied.
So what you're talking to is have a strategy if you're going to buy in there. It's not just like buying in Perth. Have a strategy. Who is going to be your tenant and your eventual buyer?
Yeah, and unfortunately, like a lot of regional towns in WA, some of the housing stock is really ordinary, and so you just want to be making sure that you're not buying something that needs the full renovation, new hot water systems, new cabinetry, new plumbing, new wiring, and maybe even engaging in a local builder to build new product might be a better scenario. So do your homework.
Let's drop to Cal.
So Cal's still strong out there, Trent. It's really interesting that the bottom end of the market is still really healthy. And again, when we talk about some housing stock, Kalgoorlie's got some of the worst going around in terms of what was built out there because it's such an old city. We do inspections on houses where timber frame houses are literally just built on the ground. So just again, be careful of what you're buying out there. Those scenarios, though, are still rentable houses, and they're therefore quite cheap. And so what happens is you end up with yields that sit up around 10%, and both local buyers, Perth buyers and East Coast buyer agents are interested in those types of returns. Certainly employment through Cal on the back of the gold mining industry and what's happened with the gold price and the activity on mining up there is still really healthy. A really interesting side of scenario there in terms of the nickel mine closure down in Kambalda. Again, Kambalda marketplace has been really strong for the last 18 months. Seen some really interesting scenarios there of people buying some places really cheap, using some of their skill set to do them up and then rent them out at really good, healthy returns. And essentially, the people that are living in those houses and living around Kambalda have gone to work on other mines anyway. So that workforce has been soaked up. It's not being transient as it has in other market cycles. And essentially, values holding up in both Kambalda and going upward in trajectory in Kalgoorlie. We're even seeing the upper end of the market in Kal be pretty strong. It is stabilising a bit, but interestingly, that there's a few sales around recently at the $1 million mark. $1 million in Kal. I think you live right next to the airport for those dollars, but that's where the decent sized properties on big houses on big blocks are. So, yeah.
Most of the time it's around the golf course, Hannons, these sort of areas.
Yeah, back down towards the golf course as well. Yeah.
Are we still calling Kal a buy? I'm just so nervous that at some point the gold price starts to waver and Kal just starts to really soften, given how lofty it's become.
Yep.
But again, it's hard to see how that starts to... Given how much perceived risk there is in the world in the Trumpian era, it feels like for his whole presidency, we're just going to see a high gold price as a hedge to his erratic behaviour.
Yes. And so, interestingly, to think about what the gold price does next, it's about $3,400 an ounce at the moment. There's plenty of people around that will tell you that's going to go up by another 10%. That means that there's more activity in the gold mining sector. There's a bit of merger and acquisition stuff happening around Kal. Yeah, look, it's really hard to see that the workforce is impacted, and that's essentially what would impact values in there. The only other scenario to think about in regional towns in WA, in particular mining towns, is if someone builds a camp that creates a lot of accommodation overnight. A couple of the caravan parks are doing that at this point in time, so they are bringing supply. Not unlike what might happen in the Perth marketplace, the biggest injection of beds we get into the Perth marketplace is student accommodation. 750 beds in Uni Lodge in the city there that's about to be finished. You don't do that in Kalgoorlie. They might add, say, 20, 30 odd dongers at the back end of the caravan park. Is there 90 beds in that tops? That would be the top scenario in terms of the instant supply you can bring to a marketplace like Kalgoorlie.
Then it seems like it is a fairly sustainable market at the moment.
Yeah, I think upward pressure on values there for a period of time, and clearly a 10% yield, gross yield we're talking here, is attractive to any property investor and in fact any investor.
Let's head straight down to Albany.
So Albany, as we've been saying for a good period of time, has continued to be a very hot market. They're running out of vacant land there, and we've said that in the past, and so that means that land values are going up. They've easily doubled in the last 2 years. The interesting thing, scenario that we've seen most recently, is some of the buyers exiting Albany, saying that's too expensive, and going to Mount Barker to find a block of land. Guess what's happened to Mount Barker? Land values have doubled up there now too.
Wow.
So we've got a scenario where...
I thought they only had chickens there.
Yeah, they've got a couple of pubs, a few hills, and some chickens. No, beautiful location. And essentially what that's saying is that the behaviour of the locals in Albany goes, okay, I can't afford that price point. Still need to be in the Great Southern region. Mount Barker's a really nice place to live, and so I'll go and buy my block of land in there and build my dream home.
Does it surprise you, the sustained demand for Albany, when it suffered half a century of malaise?
Yeah, it's been really interesting, but I think it's actually the perfect litmus test or scenario post-COVID of where everyone woke up during or after COVID and said, I need a sea change, I need a tree change, I don't need to be based in Perth anymore. Elon's bought me Starlink, so I've actually got proper internet service. I can work from anywhere. I can travel to a place that is a little bit too far by car, a 4 or 5 hour drive that might not have been a weekend getaway in the past. Suddenly, if you're going for 3 or 4 days of the week, it becomes a much nicer scenario in terms of lifestyle. And then we've had even some of our own team members move down that way in terms of looking for that lifestyle change.
It's beautiful down there. It crosses me that this has started to balance back a little bit after a couple of years of lockdown. The romance and then reality start to set back in. Clearly reality has set in that this place is bloody awesome. And we want to bring a family up here.
And so interestingly, the most recent feedback from Luke, our valuer down there, is there are Perth buyers still active in that marketplace. We must remember that the Airbnb marketplace for the locals buying other houses to Airbnb them has taken a bit of stock out of the market, so that puts another bit of
I think it's taken a lot of stock out of the market. Airbnb probably has impacted the Albany market, I think, more than any other regional area in Western Australia.
Yeah, for sure. And then again, as we'll say about all of the other regional locations, anything at a good price point, as in this is around about the 550k or lower, is flying out the door. That's not going to last on the market for a very long period of time.
Also replacement cost.
Yes.
It costs more to build a house down there, surprisingly, than it does in Perth.
Yeah.
I thought it'd be a bit cheaper, given there is a workforce there. Costs are a bit lower down
Experienced
there.
builders.
You'd
they
think,
know what they're doing.
things get done a bit cheaper. Nope.
Yep.
Everything's more expensive. There's a premium.
Yes, and that's a similar scenario to the Dunsborough type location. You've got lifestyle builders where you might be paying them to be out surfing or fishing or whatever else they're doing and not actually building your house maybe. Does that cost more? I'm not sure.
It's all
Products
about
are usually pretty good.
Fixed price contract at the end of the day, Brendon. Let's move west to Margs, mate.
Yeah, so coming back up the coast and in towards the southwest, Margaret River marketplace is still really strong. Again, I don't want to sound like a broken record, but we have had a lot of pressure on rentals through there. It's still the case now, very much a lifestyle location in terms of people going to live there, downsize into the area, taking advantage of that beautiful location, or that natural environment around the place, as well as obviously the proximity to wine region and the coast. And essentially, it's a scenario where not a lot of supply. Thankfully, there are a couple of subdivisions around town, but there's not a huge amount of supply coming into that marketplace.
Is that limited by infrastructure again? Because we know there's a couple of big land estates that are going in South Margaret River.
Yep.
But the theme seems to be not a lot of supply. So which one is it? Is it being held up a lot by services?
Yeah, so I think it is a case of the supply just trickling into the marketplace following essentially connection to services. So it is there, it is coming, but it's not like you create 100 lots overnight.
And you need to build on them too, right?
Yeah, exactly. Yep. Yeah. The environmental-based subdivision or environmentally friendly subdivision down towards Witchcliff seems to have been really successful. It's a really interesting project that maybe we should talk about at some point in time in terms of how the socio-economics work of that. And what I'm alluding to there is that there's really low price points in there because there's small blocks and small houses, as in you're allowed to build a one-bedroom, really cost-effective dwelling there through to a normal family 3-bedroom, 2-bathroom home. So unlike a lot of suburbs in Perth, there's actually a really big price differentiation in a local subdivision there, which is great. It creates great opportunity. So yeah, it's unfortunately for everyone trying to get in, it's still an expensive place to buy wherever you are in Margaret River, but there's also some pretty quirky, nice properties to take a look at through there.
Reckon they vote green in Witchcliff?
They probably do in that subdivision.
Yeah.
It's very eco-friendly, which I commend in terms of them having got that subdivision off the ground. It's very impressive.
Has a lot of rainwater tanks and PV cells on the aerial
absolutely
photos.
And there's hay bale houses in there, which is amazing.
Very cool. Let's look to Busso and Dunsborough. It's gone from white hot to red hot to white hot to red hot in the last 4 years. Which hot is it at the moment? Yeah,
it's still pretty hot there, Trent. So interestingly, that report from Top End or Prestige valuer Shane Greaves down there in Dunsborough is that there have been 5 sales this calendar year so far of post $5 million. And the feedback from agents is that there's more buyers in the market looking for that type of product. So if you're looking for confirmation that it's the place to be in terms of people buying in, then there's your confirmation. And if you talk about ripple from western suburbs like Karratha and Peppy Grove out into the rest of the Perth suburbs, that essentially is what's going on there. So if you've got the top end looking to buy $5 million properties, then everything below that level will have price pressure on it, right down to the $500,000 to $1 million level through Busso and into Dunsborough.
Can't be a lot of 500,000 left.
No, you'll be looking at units essentially through old parts of Busso and old parts of Dunsborough at that type of price level.
And then finally, I think we need to talk to Bunbury. Bunbury, as we know, Perth's little sister. More diverse, I think, in its housing choice in a lot of ways than the rest of the regions. More of a city, really, than a town these days.
Yep.
But still starting to see a lot of price pressure as well.
Yeah, so interesting to talk to Lee Martin, our valuer in Bunbury. I really liked his line around where prices sit. And so the values that were sitting at $750,000 to $900,000 across a range of suburbs in the city of Bunbury 18 months ago, they're now worth $1 million to $1.3 million. So they've seen that uplift that we would have seen in suburban Perth. In terms of stock level at affordable prices, there's basically nothing left at the sub $500,000 mark in decent suburbs. There might be in some of the slightly cheaper suburbs through there, but at Bunbury City Centre and then out into your Australians, Eatons, down into Dalyellups, are in those scenarios of heading to post 750s into 900s and up into $1 million for a single residential home.
Yeah, it just seems there's not a lot of places around West Australia anymore where you can have a low-cost property outcome. Let's think about the regions here. Bunbury doesn't exist anymore in terms of having somewhere cheap to live. Certainly not in the southwest, anywhere there really.
Yep.
Albany's prices have doubled. You got Kalgoorlie's prices continue to run. Geraldton's running through the roof at the moment.
Yep.
What's left? Newman's probably the only one that's fallen off the back of the wagon.
Yep. So Newman's got supply because of mining and government-owned housing through there being boarded up, so you can bring that supply back to the marketplace. And then I'll just pick up on Geraldton as a price point is still there in terms of something to buy sub $500,000. And interestingly, Lee from Bunbury mentioned Collie saying it's white hot at the minute, but that's that price point. So can't afford to be in Bunbury anymore. I'll go down the road a bit like what we just talked about with Albany and Mount Barker. I'll go and look in Collie because it's more affordable and the housing stock's okay within reason. And there's obviously some pretty good employment opportunities through that location down there as well.
Lastly, what about York and Northam, these sort of places?
Yeah,
because they've got that same issue of there's going to be people coming here for certain projects. We're talking multi-billion-dollar projects running through some of these towns with regards to AI and data centres and things like that.
Yep.
And no one to build the houses, no land available. What's happening?
Yeah, so again, a lot of price pressure there. It was actually Avon Valley through into these towns, so 2J and Northam and York and those kinds of places, essentially was the start of some of that post-COVID value increase in terms of people realising that they could live an hour to hour and a half's drive east to Perth and have somewhere that they can create their lifestyle. Still seeing a lot of price pressure there. Interestingly, I think that market starts to chase a bit more character homes or designer type homes. So if I'm going to chase my lifestyle scenario, then I'm going to make it slightly different to what I'd have in suburban Perth. And we can't see those values correcting at all. Probably missed the boat a fair bit in terms of affordability. But there are still, again, we go back to housing stock. We are still seeing the fact that there's some relatively poor housing stock through some of those locations and therefore the opportunity for a bargain now and again. I think just to touch back on modular homes, that's the scenario from a new point of view that presents itself into some of those locations. We're looking at, say, a place like Narrogin that's got a lot of infrastructure mooted for battery power as well as solar and potentially wind. And you look through town there on an aerial map and you'd probably soak up some of that land locally there pretty quickly, even to the scenario that maybe the local government or the state government want to get involved in providing some of that housing accommodation that can be built relatively quickly and put on site.
It's important for industry at the end of the day. If you can't have people having roof over their head, you can't have things being built.
Yep.
You don't get outcomes.
Yeah, exactly. And that's where maybe if it's not viable for the private sector to make that investment, then maybe local and state government need to step in and make sure we provide accommodation before the infrastructure needs to be constructed so the workers have got somewhere to live.
Sounds like a John Kerry thing.
He'll be right across it, won't he? Yeah.
Brendon, thanks for coming in, mate. Appreciate your time on the regional update. We'll have you in again in October.
Yeah. Cheers, Trent. Thanks for having me, mate.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!